In terms of the mortgage rates, which are tied to the 10-year bond, they have been coming down on a slowly. Should they come lower? They should, but it all depends. As we're going to the election, historically rates do come down. This year's been very unique. It hasn't come down as what we've seen in the past, but slowly it is coming down. But my analysis is that it should come down, and inflation has is lower than what they intended to be. So we're nearing that 2 year mark where the rates for the prime will come down, the mortgage rates will come down, and to we got to spur the economy at one point. Right now we're at at a stagnant inflation of sort of.
Yeah, and if rates do come down, which product type within commercial, industrial, multifamily, mobile home park, office, retail, what do you think is going to most benefit from rates coming down?
I think the number one, in my opinion, would be the multifamily and industrial. Office still is not going to recover that quickly.
Yeah, I agree with you on that. Mobile home park, I think, as well. I think the key is be able to get leverage on deals if rates go down. The DCRs can be a little healthier, and therefore you don't have to put as much of a down payment down. So there's kind of that ability to open up more transactions. Curious if if rates do come down, do you expect? I mean, how quickly can we get back to a more normalized marketplace? Do you feel like it would take 3 months, 6 months, a year to still kind of flesh out what your take on that?
I would say about minimum 6 months to 1 year, but 9 months would make more sense. But it all depends. Even with rates coming down, is like how much capability does the consumer have to make that new purchase, to make those payments. If in general, if the income of everybody's going to be lower, or it's not going to be as much cash flow, even with the lower rates, it might not spur the economy as much as they want it to.
Yeah, absolutely.